Hello, everyone. This is Teddy Keckstead from Forex Trading Unlocked on June 22nd, 2020, and we are here with a Forex market analysis and live trading webinar for you to go over what's going on in the markets as we are starting off this new trading week. Let's put up our disclaimer real quick, just to remind you that this webinar is for illustrative and educational purposes only. Remember that this is in the you are trading in behind following this webinar, so this is just for educational purposes only. Do not try and copy the trades that are going on in here. If you want to do that, then you should subscribe to the Signal service. And with that, let's go to our live action screen here, forex-trading-unlocked.com. We already have the workstation page pulled up, and there's some numbers that are coming out today that are a little mixed bag of goods for most of the crosses versus the dollar, but nothing to really get us going too much. I mean, there's a couple things, but the main thing is the dollar index. How did that end the week last week? The dollar index ended on a very strong positive note, making higher move highs and extending its correction that it has been in the process of pushing for the past 2 weeks. Now, it hasn't been an excessive correction, so right now it is in a bearish market. It has made a lower move low, and also right now is still making a lower move high as far as we are concerned, unless you go on the more intraday basis, in which case we will have already made the low that was set here on the 9th. A few days later, we set a higher or lower move high. Then we fell back and set a higher move low, and then we made a higher move high. So short term on the daily basis and hourly basis, we are having still a sign of a bull, except for what's going on today. So let's start out with the Euro US dollar, which is the major component in the dollar index, and see what's going on with this market. All right, so we have the Euro US dollar, and as you can see, we have a big reversal of fortune today. However, if you look at the steepness of the slope, every time we've spiked lower, we seem to bounce back about a half a buck or so, and then all of a sudden it goes and collapses again. So right now we have had a sell signal that was here triggered a little over a week ago. This is excuse me, let me move this over one there, make this a little clearer. Okay, so we have a bearish engulfing line. That's this first negative bar after this high right here. That is a high probable Japanese candlestick pattern, which by the way, there's a book called High Probable Japanese Candlestick Patterns. It's available on Amazon.com and Kindle in paperback version. And with that book, you can read how to trade these signals. So anyhow, this sell signal has come to fruition and has, in the short run, hit the intermediate target. But now we'll see what is going to happen this week. Right now, as we're speaking, the market is going bid at $1.1245, having come back off of its lows. Now, it did not make a lower move low today or last night as the markets opened up for the new trading week. So the low is secure from Friday. So let's put this in as our downside risk trigger. Okay, so any trading below this will have this market back into a bearish format. Okay, so the low on Friday was 111.68, and the low today, let's see, 111.68.3, and the low was 111.68.4. So almost a double bottom, but if you want to get intricate about it, it's off by a pip. But we do have strength that is showing in today. Now, the one thing that's interesting is we still have an inside day as opposed to Friday's range. But right now, as we're talking, this market is lifting the bid. So what happens if we take out the high of Friday? Well, if it does, and that's definitely an impressive move for the day, we have an outside day, which would set us up for sideways, not necessarily bullish. Remember, we had this nice up day here, and then look what happened. Reversal of fortune, and it sold off for 4 sessions. So does it mean that we're looking for a break that's going to take out this low? Well, not necessarily, but if we do fail from here at 111.65, then odds are that we will push this slide further. So let's see if we go now. If we just take this low here and we go to this high here, we can find a short-term target zone. Okay, so we're going to use Fibonacci just to use this for a short-term target zone that will define our short-term range for a downside target. So remember, we had our low here from Friday at 111.65, and we are bearish if it falls below it. If it falls below it, well, then it will be touching into this 111.48 to 110.80 support band. That would be our initial target zone if we go off of the most recent move low, which was this one right here. So let's say we don't use that and we actually go down to this low, a much more defined bottom as far as the longer term trend is. Well, then all we do is we kind of extend things. Excuse me. Now, if you notice that I just moved this Fibonacci area here from this low here down to this low here. Now, notice what has happened here. This 110.80, which was the lower support band, which was our 0.618 level from that first low, now it's a 50% level. So this tells us something, actually. That means that harmonically on a Fibonacci level, the low that was set back here in April, on April, what was it, April 20th, as well as the low that was set on May, was it April 20th? Excuse me, April 27th, to April 24th, 2020. Sorry, I'm looking with the two different colors here. So, and then May 25th. Okay, so those two lows set up to harmonically meet here with two different fib levels. But that also moves this fib level from here down to here if we extend that low. So this middle level here is both a 0.618 and a 50% off of this low. And then we have this low here, which would be the 0.618 off of this major one here. Now, just for argument's sake, let's just see if any of these other ones line up. Okay, so these are not quite as close, but this would have us 0.318 for their initial one here, and even a 50%. Now this is pretty good, because if we go off of this low here, then that means we have a high probability of making it into this downside range right here. So let me pull up a little ellipse. So right now, should the bears stay in control, then there's a really good probable chance that we would reach this 109, maybe not down to 109.94, but definitely fall through the 110.80. That would be a really good area. So it's not like we have a big slide that we're looking for here, but that would be a good area for us to find support. Let's clear this out here. We don't need to have. Okay, there we go. Visibility. Okay, just wanted to make sure we got that. Oops, that was the wrong one. Okay, so here's our arrow. Trying to get this ellipse. There we go. Let's get this. Okay, so now this makes it a little bit clearer for you, I think. Okay, so here's our target range. We obviously have a sell level here at 111.65. The market's at 112.43 right now. So we have our daily analysis where we have definitely a downside target still there. Let's look at the hourly chart. We're dwelling on the euro here because we want to see what's going on. Well, now if you look at the hourly chart still, we haven't made a higher move high in a significant level. So we're coming into some pretty strong resistance here. So it'll be interesting to see how things shape up over the next few hours and the rest of the trading session today. I would say this 112.54 area is going to be a very big area. So it's not that far away. It's only 8 pips away. A breach of that area probably will maintain bullish strength on the hourly. However, if you look at the hourly chart, it's still in a bearish mode. The one thing it did do is if it took out this trend line here, so in the short run, we breached that. Let me make this a little clearer for you. So on the hourly basis, we have a breakout that occurred this morning. So now we're pressuring this 112.54 area, which would then confirm higher move highs. That would be significant as far as saying that on the day, it's probably going to stay neutral to higher for the rest of the session. Does that mean that it's a bull overall? Absolutely not. It does not mean that at all. So now let's look at the British pound, US dollar, and see how that component is doing. We don't need to look at the hourly because that's not what we're here for. Okay, so on the daily basis, the British pound, this also had a bearish engulfing line sell signal on the same date. Actually, it was on June 11th, so that was 11 days ago. Now here today we have a very similar look to the pound as we do in the euro US dollar. So right now dollar bulls are getting hammered by the major two components of the dollar index, and we are just going to say that this is probably in the same scenario. And to get confirmation for the European currency crosses, let's see if the dollar's really under fire. And here we go. We have the Swiss. Now look at this. Ironically, while the pound and the euro have been actually swing trading, the Swiss has been going nowhere. So this tells me a lot about the consolidation factor of the dollar and the Swiss, which are flight to quality currencies. It means that overall strength and weakness of the dollar is probably pretty much contained, as long as it is in this range bound kind of trading with the Swiss. Now it is falling against the Swiss a little bit, riding support. So we will see what happens here. Now, right now, it looks like the bears are in control, and they want to see how far they can press this move. Well, unless we get below this area here, where we set this low a week and a half ago, I don't see this market getting very bearish in the U.S. dollar Swiss. So 93.77 is pretty much holding up this market as far as being in a consolidation pattern. If you look at this on the longer term scale, and we just go down to, let's just put this here. Oops, not a horizontal ray. That's not what we want. We want to have the horizontal line. Okay, so let's just use this as our baseline. Okay. So since 2020 started, which is right here, we've been in the middle of this trading zone. So here's January. We started off the year right here. And then we had February, some inklings about the coronavirus. And then boom, middle of March, we have shutdowns all over the whole world. Then we have the major balloon reaction back up to the highs here, making higher move highs. And then what happens? We have this consolidation range. So we basically have just fallen below and are riding on this 94.98, which is the lower boundary of the range that we've been trading in for basically the whole first 5 months of the year. And the irony is, look at this, 94.98, so basically 95 even up to 97.88. So you can basically say 95 to 98 even. A $3 range is what the majority of trading has been for the Swiss. So and anything above 95 even pretty much will have us in a neutral posture. So right now we're evening out in those currencies. Let's look at what's going on with the US dollar and the Japanese yen. Now the irony is, US dollar seems to always be, for the past like 8 months, 10 months, almost like in a contradictory mode, meaning that all the other currencies in the world are rallying against the dollar is falling apart, and here we have a little bit of strength in the dollar versus the yen. For some reason, these two want to seem to go opposite directions when you have a major play going on in the dollar. I don't know why, but it just seems to be it. Now, not that we're getting a big rally here. You can see it's only slightly higher on the day. But it's holding up. Now, the ranges have been very tight for the US dollar yen, so be very careful. We had some good swing trade going on about a week and a half ago, and then you can see what happened last week. It dried up, and today is not very much unlike any trading day it's been for the past month and a half. So we got a really tough trade in the US dollar yen, waiting for a signal, and until we get one, we're just going to hold off on that one. So let's see what else is going on in the Asiatic trading zone. The Australian dollar and New Zealand dollar have been pretty much trading kind of in tandem. They had set a higher move high a couple of weeks ago, and now have been slowly trending lower. And you can see, obviously, today there's an outside bullish day. Now, one thing I have to say about this is you got to be very, very careful when it comes to this kind of a day. We're starting off the week very strong. There's all kinds of reasons why the dollar can be up or down, or any of these other currencies could be strong versus the others. But the one thing we can see today is definitely there is a selling off of dollars. So we have to see what kind of a rotation we have going on with the equities markets and the bond markets, and see how that really falls and comes into play today and settles out this afternoon. When we see that today, we'll have a good marker as to, the first day of the trading week, just like the last day of the trading week, has a lot of liquidation, has a lot of position offsetting, has a lot of entry positions, has all kind, and also we have the futures and options expiration, as well as we just had triple witching for the equities in the U.S. So these things cause a lot of erratic differences in the spreads and the pricing. So while that happens, that can cause a lot of erroneous moves in even the cash market or these other markets. So that being said, that means that we don't want to get too gung-ho on a rally or a big break on a day like today because of what's going on. Now, next week we also have a holiday week. in the U.S. So it'll be for the next week and a half. It's going to be probably erratic trading because of both the expirations and then moving into July 4th holiday. And so that will be kind of a midsummer lull already. Can't believe that it's midsummer already, 2020 almost. And considering how this year has been, it's like, what year? What happened? So anyhow, right now we are overall bearish this market. We are in the middle of a correction. We're having a positive day. I will give you a marker here. So only if we can rally above 69.84 do we get bullish. And I would say be very cautious here because any failure of 67.79 here would have us definitely in a negative way as we would make newer move lows. So right now we're looking for a breakout. In between here, I would use caution. So the same thing is going on in the New Zealand dollar, US dollar. This pattern is very, very similar. As you can see, this market here has made a big upside move as well today, but it's in the same type of mode until we break out of the high from that was set last week or this low that was set. Now here's the interesting thing is this low here was 63.88. This is 63.82.6. So this low today is just above it. We did not make a lower move low. I guess you could kind of say it's a double bottom base, but right now I think what we're doing is we're consolidating in this range. We got to wait for a breakout, and to the downside, I think you have your biggest potential. Now let's look at the U.S. dollar TRY and see what's going on. The Turkish lira somehow has been holding its own versus the dollar for the past week and a half. How and why, I do not know, but it has stayed in a very tight consolidation range. This means something too, because as the lesser currencies start to wind their coils, so to speak, that means these other major currencies, they're the ones that are influencing the dollars. So right now we have lesser currency crosses that are, and also look at the yen. That's one of the major currency crosses versus the dollar. Not much volatility or action today. So right now everything is going on in Europe. Could have a lot to do with the fact that you have Brexit. You remember Brexit? It didn't end yet. They just had the first phase that ended in February. So they're moving on towards the trade deals between the EU and the UK, also between the EU and the US, and between the US and the UK, because since the UK is split from Brexit, there's all kinds of unilateral trade agreements that have to be re-signed and what have you. And that is all in motion. They don't talk about that very much in the U.S. or even on the business channels right now because they're just too concerned with other social issues instead of dealing with just the financial news that we need for especially the currency markets and the equity markets. So anyhow, this is our signal because no matter what, price action is price action, and that is what is going on in the market. So let's look at the U.S. dollar Mexican peso. This is a market that had been gaining strength as far as the dollar is concerned for a little while. Last week it went into a little bit of a consolidation range here, and we're going to play this the same way, just like the other ones. Right now we're going to key off these tight lows and highs. Anything in between here, it's winding its coil. We're looking for a move. We do not have anything to do right now. However, if this market does take out this low, that would be a nice bearish sign for sure that we would probably start to drain this currency back down towards the 21 peso, maybe even down into the 20-something pesos to the dollar. Just because we've been in a bearish slide. Right now we've made a lower move low with a lower move high. Intraday wise, we're kind of in neutral, so that's why we have these levels. A failure at 21.89 pesos to the dollar would confirm, excuse me, a lower move high and then a lower move low, which would be indicative of what? A downward trend. So now let's go to the U.S. dollar Canada. Oops, we got that signal in wrong, or that symbol in wrong. U.S. dollar Canada. Here we go. This should be a valid signal. Now, of all the trades here, we finally have one that is on. We have a position on in the U.S. dollar Canada. As you can see, we are slightly in the red. It's pretty much right there. We're long at 135.77. This is from last week. So not very far away from where we're at right now. In fact, I can put 135.75, 135.70. Well, there's 135.75. So we'll make this to... Okay, so that's our average of where we're long from. So you can see that we had this buy signal right here, which is a bullish engulfing line that triggered our long. And right now what we're doing is we are keying off of this low right here and this high right here. So obviously we have a long position. However, right now it's in a consolidation range. So a breakout of this area here around, let's see, $1.3694. That would have us in a nice bullish way, looking for a rally to continue forward and keep following through with this big buy signal. Now remember, overall, this market is in a bearish way. It has made significant. It filled this gap back here and has made significantly lower move lows and lower move highs. But that's also something that the trend, while it has been bearish, we are getting closer to downward sloping resistance. So look at this. If we break out to the upside at 136.94. We will be pressuring this downward sloping resistance line, maintaining the downward trend, and any rally above that, whether it be through attrition where we get above it, or any rally that just sparks a move higher sooner than later, then that would be bullish. And also, after having filled this gap, we would be getting closer to that range where we've been trading in for a while. And most likely that's where our first initial target zone would be this bottom area here at 138.58. And once we can get above here, this would be just having us in a big sideways. So not that we're looking for any major rally to take out this high from back in the middle of March. But it is a very good possibility that the dollar bulls, like remember, the dollar doesn't necessarily have to be a major bull right now. It could just be in a sideways trade where it's been hitting the lower band of support, building a base before it strengthens against the major currency crosses, but not in a big way. So, and I think that right now, especially with what's going on, the Fed and the U.S. government has no concern about trying to strengthen the dollar versus other currencies, because right now for our exports, it's better that we have a lower U.S. dollar. So I think that it's falling into a good plan for the U.S. because where they can't control certain factors, at least this is one variable that while interest rates are stagnant and while the economy is trying to get back online and fire on all cylinders, which odds are it will not, especially in your major cities, with the smaller businesses that are looking to close after they meet their PPE requirements, we'll see what happens later. So that's why I think we get a nice correction in the dollar now. Going into the rest of the summer, not a big one, just putting us back into this consolidation range, like for instance with this currency, getting us back to above $1.38 to $1.40 area and riding in this area here, which would remember when support fails, then it becomes resistance. So if we don't get above this, then that would be the area saying that, hey, the dollar is buffering here, it's going to go sideways, and all of a sudden, boom, the bearish trend continues. So let's go and see what's going on with the Euro US dollar. We've made our lap around the world with the major currencies. We can see why the dollar seems to be getting pressured since we've been talking. You can see that the let's see, $1.1245. So the market's right where it was when we started this webinar. So we have to see how today goes. We have, like I said, the one trade on. That was because, let's go back to the US dollar Canada. The reason that we still have the long on for the US dollar Canada is because of the fact that we have this bullish engulfing line buy signal. So as long as that's in place, once we get to our target, we will raise our stop. And this is the key thing, is right now we have our stop that's all the way down here from our initial risk, which is this low right here around $1.3313. So right now, if we take that low out, obviously that would be a very bearish signature. So, but we are looking for this market to continue forward to get to its target. And right now, what we're doing is we're using this as a longer-term base target. As you can see, look at this, 0.318 from this high down to this most recent low where we got our buy signal at. We have a Fibonacci harmonic that comes in right here at our baseline for where we had this market consolidating. And then we have the 50%, which is in the middle of it, and the 0.618, which is right in the top of it. So like I said, $1.38 up to $1.40. Very likely if we can take out this high at $1.3694, with the extreme being somewhere right around just below, let's see, $1.4148. So basically $1.41.5 would be the high that we would be looking for. So that's if we get the bullish momentum. We will see. hopefully we do. After all, we would like to make money on this trade, right? So that being said, we want to thank you very much for your time. And speaking about our trades, if you want to know the trades from our videos and see how we're doing, all you do is go to our website, www.forex-trading-unlocked.com. And at the top in our menu bar, the nav bar, you see products, courses, and services. If you go to Forex Signals and you click on that, that will bring you to another page, which will help you to see how we're performing on our signals. So if you haven't followed all our videos, or if you're new to us, or if you missed any, or if you missed trades and you want to see things, besides backing us up with, where is the thing? Come on, it's loading. It's getting the info. It's pulling up the signal actually right now. Okay, so here we go. Forex signal page is loading. There we go. Okay, so on this page, when it says Forex Signals here, it says Forex Trading Unlocked, Theodore Keckstedt, that's me. What you do is you click on that, and this will pull up our whole stats page. And this will show you our performance for our stats, show you where we are on the month, on the year, what have you, and how to subscribe to our signals if you like. So with that, you can see that on the year we're up 68%. We're actually up more because this account was taken from FXCM collapsed a couple years ago. So this was a dormant account that had been closed out in May of 2018. That was when they had collapsed. That's when Gain Capital took them over. So there was a position that was still left on that was closed out, and then that had that yield because the only trade for when it transferred was just that. So we had minus 16%, which lowers our total return as far as year-to-date stats are over the past 2 years. Want to look at it, or 3 years. But really, this fund was started we turned it on this year. Now, when we did, there was a draw on the account. That's the reason we're like, hey, we'll just use this one. So they took out a fee, and there was when we first hooked it up to try and make sure that we had the connection through our platform, we executed a short little trade. It just lost a couple dollars, whatever. But this is basically a fee. So that's our drawdown here from this. These are actually not from any trading that we did this year. Our trading actually began in the middle of February. Now, March, we actually survived that month, which was all over the place. We had a big run up, and then obviously with the volatility, that's when margins exploded. So, and here's something also, when you see our drawdown on deposit, the money that's used in here, this is for an account that should be started with $200 per $2,000 that you put up, definitely for $1,000 that you put up, as far as, which means that you would not be using the full amount of your capital. So you're trading only at 10%. So if, let's say that you had say $1,000 to $2,000 worth of capital, you would only have $100 to $200 in your actual FX account that you would subscribe to for this, keeping the other money in a bank account, whatever, what have you. So we use 10% of the capital to make all the money on 100% of your capital. So you're never, ever breaking that risk. And as you make money and the profits generate enough to move to the next level, then you do the same, and you maintain your capital base. This way your risk, it's a slower way of growth, because when you look at it, it's like if instead of being up 68%, you really only be up 6.8%, but that would be on 100% of your capital, using only 10% to make all of that return and at risk. And one of the things too is margins are very high right now too, so that's another reason why we keep it at those levels. So if you want to know why those little discrepancies, look how they are. So, but anyhow, if you even look at it on the year, and you even start with that 1st January deposit, and we were up 100% on the year, 68% overall. Obviously in June we are just slightly down on the month, so we'll see how this month goes. And obviously the position we have on right now is also in the red, so we'll see how that goes over the course of the next couple sessions, and hopefully it goes our way. And with that being said, I want to thank you very much for all your time. Always check us out at www.forex-trading-unlocked.com, and also subscribe to our YouTube channel too, so you can keep abreast of our videos and learn how to trade these signals. We have some interesting trading setups that we're coming into the market, and as we get through these holidays and the summertime, and I think we're going to have some nice long-term trading setups also in this not